It's about that time of day again here, boys and girls. Welcome back. Welcome back. Joseph James, School of Trade, SidewaysMarkets.com. Welcome back to your nightly newsletter. It is the 29th day of the 5th month of the year 2014. We are almost out of the month of May. Bring on June, baby. Tomorrow is the 30th day of the month, the last trading day of the month of May. It's been a fantastic month. It's been a fantastic week. I hope you guys have been having fun along with me here for the newsletter. We've been learning and earning together all week. Here's what to expect. We've got a great newsletter prepared for you here this evening. First of all, we got our big money out of Crude today. We've been waiting for this to happen all week. We've been talking about this since last Friday, for crying out loud. We got the pullback on Crude. And then wham, right up through new highs today, but not so fast. We get some important clues going in for crude oil tomorrow. So big money made today on Crude. We get exactly what we wanted, pushing higher on Crude. On the Russell, we traded sideways. Range-bound markets on the E-minis today. Low volume on the equities today. Took a little pause there. And, of course, on gold, gold continues to try to push lower, but still a little bit sluggish here after that big drop on Tuesday and Wednesday. So we'll first take a look at what happened in the markets today. Big jump up on Crude, sideways on Russell, sideways on gold. And remember, sideways is very easy to profit with. We'll take a look at those charts in a moment. Then we're going to roll up our sleeves and get ready for tomorrow. We have a ton of news on the schedule in store for us, starting this evening and then going into tomorrow morning in Europe. And, of course, tomorrow morning in the U.S. We'll get ready for the news tomorrow morning. And then, of course, it wouldn't be a newsletter without some charts. We're going to load up those charts, and we're going to take a look at what we have in store for tomorrow, Friday, the last day of the month. So now that you know what to expect tonight, we'll take a look at what happened today. We'll prep for the news tomorrow, and we're going to grab our charts and get ready for tomorrow's price action and the trading opportunities as we finish up the month of May. Now, before we jump in here today, I want to remind you, if you're not watching this video right now on our blog, make sure you find the link below the video. If you're watching this video on our YouTube page right now, do not delay, pause the video, go into the information, and click on that hyperlink that will take you right over to our blog at Sideways Markets. Why do I say that? Well, because all the good stuff's over here. First of all, you can download all of our commentary, every single chart that you see me using today. So every single chart that you see in the video, I'm not going to post them all on the blog. So if you want to get all the charts, you got to click on that link. That will give you a chance to download all of them, right? So download all the charts over at slideshare.net. Now, why would we do that? Well, because I'm going to use those charts tomorrow morning in my morning prep, my morning routine in our live trade room. So if you're a member of mine, pause the video for me, download those charts, and bring them with you tomorrow in the live trade room at 8 o'clock. If you're not a member, you could also download these charts and then have them open right next to the video tonight. That way, as I'm going through each chart, you can have them as well. All right? Whatever the reason is, get your hands on those charts because they are worth, well, they're worth their weight in gold. Or maybe worth their weight in crude oil right now, right? Crude's going higher, gold's going lower. So they're worth their weight in crude oil futures contracts. Next thing here, upper left-hand corner, don't forget, if you haven't come out and joined us yet in our trade room, I have a free pass for you. That's right. We are the very best trade room on the web. I've been doing this over 10 years now, and I would like to invite you to come out and join me in the afternoon in my live trade room. All right, so check out that free pass, upper left-hand corner. All I need is your name and your email address. I'm going to send you an invite for our next live trade room. And then, of course, down in the lower left-hand corner, right next to my ugly mug, you'll see we have our nightly newsletter mailing list. Give me your name and your email address, and I'm going to send you a confirmation email. So make sure you check your email. I'm going to send you a confirmation email. That way you always get your hands on the newsletter right when I send it out. All right? So make sure you download the charts. Make sure you register for your free pass. And don't forget to register for our nightly newsletter list. That way you get an email from me every evening at 8 o'clock when I send out our newsletter. All righty? Let's get started. Roll those sleeves up here, boys and girls. We had an exciting day today. A little bit sloppy at the beginning, but if you're with us in the trade room today, boy, did we have a good time, right? Made some money, made some great profit today. And, well, today was a great example of how we used last night's newsletter to profit from, wasn't it, guys? If you're in my trade room this morning, we bought the lows on the Russell. We bought on the crude as it was going higher. All right. We sold short on gold at the opening bell. Didn't get much out of that one, though. But again, a very good example here today of how we used last night's newsletter to make a profit the following day. Right? Pretty cool, huh? 24 hours ago, we talked about this, and sure enough, most of it came up, and we were able to profit from it. Let's jump right in here. First of all, crude oil futures. Now, little bit disappointed we didn't finish up at the highs. I was wondering if we were going to get to 104 before the end of the pit session today on crude. You can see we did not. A very good day, although it doesn't look like it from this chart. We had a very typical scenario, about 100 ticks on crude. We used to get about about 250, 225 ticks. Now we're being conditioned for about 100 ticks per day in range on crude. You got to know what's going on so you can profit from it. We get a typical range today. We opened down near the lows. And then sure enough, we had to wait a little bit. We had to get through 11 o'clock. Up until 11 o'clock, it was a little bit sluggish. And then what was at 11 o'clock today? 11 o'clock was our crude oil inventories. Kind of an interesting situation. We talked about this last night. Last night's inventories came out at a positive 4 million barrels in inventory. That's a build. Okay, usually more inventories mean lower prices. But today, we were watching this right when it happened. It came out just below 1 million barrels. Now, here's a classic scenario of what trading is all about. Sometimes, if bad news isn't as bad as they were expecting, it turns into good news. Isn't that interesting? Kind of a different way of thinking about it, right? So this morning, traders are prepared for 4 million in build, right? Again, higher inventories usually means either less demand or too much supply. Either way, prices are going down. But what do we get? We got 1 million barrels, right? So we had inventory was lower than what they were calling for. So what that tells us is that traders saw that as being a bullish number, right? Now, this is a great example as well as a fundamental overlay to a technical plan we had, right? What was our plan? Our plan was to buy this crude this morning. That was the plan for the last couple days. So sure enough, we had a technical clue on our charts, and then these fundamentals come in and pow, right? Just launches that baby through the roof. So we had a good example today of how we used the information from the news. That bad news wasn't as bad, so it was seen as good news, right, for prices. I know it sounds crazy, but that's the way they react to it. And we knew that we had this technical buy zone down here, which we're going to show you guys in a moment. And so it was logical. We sat here just after 11 o'clock. We watched the buyers push it higher. When they didn't fail, because that's usually what happens. Usually when you get an inventory number and when you get a reaction to where it jumps higher, usually if it's going to fail, it's going to take off and go completely in the opposite direction. That's why I always tell our students in the room, when you're dealing with inventories, you've got to give it 15 minutes afterwards. Because oftentimes an initial reaction, right, is the wrong reaction. It's the knee jerk from the rookies and the retail traders. Usually if the rookies jump in at 11 o'clock, right, those big money sellers out there are just waiting to smoke them on the way back down. That's usually what happens with the initial reaction. So what we did was we watched it as it came back into this range. And as it came back down, what do we see? We saw buyers, delta turned green, tape turned bullish, and we knew right then we had two beautiful continuation patterns that we took. We took them live in the room, made a ton of cash here this morning. And what was really surprising about it was we didn't get to 104.07. That was the big concern for me. I'm sitting here scratching my head going, okay, what's going on here? Is this just low volume? Is this people being distracted? Well, then we notice we have the volume here. The majority of the volume right in the middle. Now, I've been pretty bullish on crude all week. The past few weeks, I've been pretty bullish on crude. But I'm going to go out on a limb right now, and pending nothing drastic happening between now and tomorrow morning at 9 a.m.'s opening bell, I think we're in store for a range-bound market tomorrow morning. We got the weekend around the corner. It's been a short week. Again, I don't want to predict right now, but the fact that we didn't at least get to 104.07, the fact that we had the volume in the middle of the range, can't guarantee anything, but don't be surprised if we have a range-bound market tomorrow morning. I have another chart, though, that I want to show you on this, and you're going to see why I'm saying a little bit of a range-bound personality here, right? Trend line here. There's actually a trend line going to go all the way up here, and we're going to see a price wedge right here, all right? So relatively bearish at the beginning, but wham, did that take off here towards the end of the session. Again, lower high there, didn't close at the highs. It looks like a lot of these traders took profit at the end of the day today, just like I did, right? I'm not holding the position right now. I'm flat, and I'm sure most traders are too. So tomorrow morning, above 103.94, we're bullish. Below 102.87, we're bearish. But hold on to that thought, because I got a pretty important anchor chart I want to show you guys in just a few moments. All right, hold on tight here for that. So that's my crude VIP chart. Just giving a glance at what happened today. Now, over on gold, we had this huge move down this week already, right? You got Thursday, Wednesday, Tuesday's big move, over 300 ticks down on Tuesday. We continued that move on Wednesday, and here we are now. Now, you don't know this yet, but there is, well, you should if you were following my newsletter for this week. Earlier this week, we told you guys there was some significant support here, right? So there's a lot of technical support right here on my anchor chart. You can't see it here because this is an overview chart. I'm going to show you the real chart in a moment, so stick around. But as you can see, though, literally, we did open lower, right? We did gap down, but we immediately filled that gap, closed in the middle, volume in the middle. It's a very narrow range, 90 ticks on gold, 90 ticks on gold. That's as bad as the S&P today. The S&P today didn't even do a million contracts in volume. So this makes sense. Now, we talked about this today in the trade room. You know those big battleships, right? Those huge aircraft carriers? Well, how do you get one of those to turn around? Right? You know, if you get a speedboat, right? A little speedboat, you can turn that speedboat around nonstop, right? Well, it doesn't exactly work that way with a big battleship. Okay, these big battleships, right, they got to slowly turn, right? They got to slowly make that turn. So we're getting this sideways range right now, and the next move up is either going to be higher, right, or it could be lower. So right now, we're not looking like a speedboat right now on gold, are we? We're looking like a big battleship, a big aircraft carrier, where we need to make this slow change, right? Because the volume's been a little bit low, personality's been a little bit low, and this big drop like this, you know, guys, I've always been a big believer that big drops equal big pops. If we don't keep pushing lower here, just you wait, we will recap or regain back all those losses. And I got a big important level overhead here. I got three important levels here. I've got the high from today at 1260.6. I've got 1267.3 and 1279.7. And then, boy, I can't imagine we do this tomorrow, but then we have the prior week low at 1286. So really important levels here, 1286, 1279, 1267, 1260, and 1251.7. If we end up below that number tomorrow, look out below. And remember, I got one more chart for you. I got a couple more charts for you to look at. Right now, though, you can see, though, completely balanced, completely neutral, only 90 ticks on gold. We did close, as you can see, pretty much right at the lows from yesterday. So right now, I couldn't tell you what direction we go for tomorrow. But I do know that if we get above 1260.6, we're bullish. If we go below 1251.7, we're bearish. If we end up anywhere in the middle right here, be careful and trade this as a sideways range, buying those lows and selling those highs. Last but not least, another range-bound market here today. You would think this was the same chart from yesterday. It pretty much is. We have a very range-bound market. We had a gap up on Tuesday morning, and here we are just sitting here right now. We're still well above the prior week high, 1125.2. We're well above the prior week open and prior week close. So we definitely know that we have bulls in charge right now, but it feels more like a lack of sellers than anything else, right? Kind of what it feels like right now. Doesn't feel like we have a lot of people in trading right now in the E-minis. We can tell the volume has been a little bit lower than average. I think the NYSE volume today was about 21% below its 3-month average. So if you're wondering where's all the volume right now, tough to tell where the volume's at right now. But here's the deal. We have a lot of professionals right now that are bullish, but they don't quite know why. Isn't that a scary thing to think of, right? Now, obviously, I manage my own my own capital. I got a couple small accounts that I manage. But if you're managing $100 billion of other people's money, you probably should have a good reason why you're bullish. And right now, there's only 2 reasons why I can see that we're bullish in equities. And remember, I've been bullish since last December, all right? I've been very bullish equities. I'm a big bull in the U.S. right now for one big reason. What is it? And I don't want to let you down. It's not some fancy algorithm. We are the only game in town. We're the only game in town. Because think about it. If you've got your life savings right now, what are you going to do with it? You're not giving it to a hedge fund. I'll tell you that much right now, right? They're down big time. You're not putting in real estate. We haven't seen those numbers come up. You're certainly, as heck, not putting in emerging markets. All right. The emerging markets right now, well, over the past year, have basically been just a puppet, a puppeteer based on what these central banks do in Europe and the U.S. So it's a very difficult thing. Where do you invest your money? Are you going to put it in Asia? Are you really going to send it to China? There's each fund manager in China has 3 sets of books. The books they give to the government, the books they give to the auditor, and the books they give to you. Are you really? No, you're not. No way. Not if you want to know what's going on with your money. So now what do you do with your money? You put it in the stock market. It's the only game in town. And so that's the big reason, in my opinion, why we're seeing these stocks continue to go higher. We've got gold that's bearish right now, so that certainly is helping. But for the big reason, though, the chart says to buy, right? The trend followers are buying right now, and we don't have many other options. So the big problem we have, what appears to be, is we're at, maybe what are we? About 100 ticks off the all-time highs. No, we're more than that. We've got 1,200. So yeah, we're about 100 points here off the all-time highs on the Russell. This is the mid cap or small cap, excuse me. The S&P above 1,900. So I think what's happening right now is traders taking a step back this week and going, why exactly are we so bullish right now? Not to worry, though. We're day traders. This is why I love being a day trader. And this is why I feel bad for all those long-term traders out there right now, because I wouldn't want that job. I love the fact that every morning I wake up, I look at my charts, I see what the trend is. I do 3 things every day, don't we, guys? In my trade room, what are they? I'll bet my students are saying it right now. First thing is what? Find your levels. Second thing, find the trend. What's the third thing? Personality. What's my personality? Those are the only 3 things I have to do every day. I don't care about the global macro. Who cares? I don't care about it. It's the beauty of being a day trader. Now you turn on the television set, you go to the internet these days, and there's all this fear mongering. You should be worried about all this stuff. Forget about it, guys. You can't control it. Here's what you can control, because that's all we day traders care about. A professional trader says, I can't change the game. I'm going to game the game. And right now, the game, right now is low volume, range bound, perfectly fine. We bought the lows this morning on the Russell, made some great money. As we go to the highs, we're going to sell the highs. I'll keep trading this range-bound market as long as it wants to be range-bound. No skin off my back, and I'll make more money because of it. We don't need to follow any trends. I don't need to trade at all. Come in every morning, find my levels, find my trend, Define my personality right now. And if you want, I can do that with you in real time. Just come out and see me tomorrow in the trade room. So neutral, neutral, neutral here on the Russell right now, across the board pretty much. And we've got, of course, sideways ranges, volume right in the middle, 90 ticks or so today. Again, it could be the same chart from Monday or Tuesday. So what we're going to do is we're going to be watching this very closely. I'm going to be bullish above this 43.6. I'm bearish below the 29.1 right here, these levels right here. All right, I'm bullish above Tuesday's high. I'm bearish below Monday's low because it's basically just one big range. Okay? So that's our big numbers right now. And if we do break out, I want to see strength from those buyers if I'm going to be buying at that new higher high. If we do break out, I'm looking for strength from those sellers, and I will definitely be looking to get below the prior week high to get short. So very, very important numbers here for tomorrow. I've got 43.6 and 29.1, 25.2, and then if we do end up collapsing, 11.09, 1100, and 1096.9. I'm expecting more of these range-bound markets tomorrow. Maybe I'll be wrong. It doesn't matter. Whatever I see tomorrow morning is what I'm going to trade. I don't need to predict it. Right now, neutral on the Russell. Now that you know what happened today, gold, sideways. Russell, sideways. Crude, bullish, but the end of the day on crude was a little bit disappointing. Now let's prep for tomorrow, because tomorrow is the last day of the month for all the fund managers to pad those numbers. Tomorrow is the last day of the month for everybody to get out of their positions before we head into June. A lot of fireworks happen at the last day of the month, and then next week we get the beginning of the month, and the beginning of the month is always a bunch of fireworks. So let's take a look first at the news for Friday. Now, heck with Friday, let's take a look at what's happening tonight, because Thursday evening we have a whole slew of news here coming out tonight from Japan. Now, the Japanese economy has really been chugging along, but boy, they've made some big fiscal changes there, some very monetary policy changes. They're really manipulating a lot of things they've never done before. So it's exciting to see what's happening there coming out of Japan. Big news number here is at 730 with CPI and 750 from industrial production. That industrial production number is going to be huge. So if you're trading Asia, if you're trading London, I doubt we get much impact in London tomorrow morning from this. But if you're trading the happy hour session, of course, I'm in Los Angeles, so trading the Asian markets, the happy hour session for us. If you're trading the happy hour, if you're trading the Asian session, be ready. Be ready. There's a lot of fireworks coming your way. And then we got news tomorrow. We got some small news out of Germany, 2 o'clock, 3 o'clock out of the Swissy. We got news out of India at 8 a.m. As you can see here, we got quite a bit here before the opening bell in the U.S. 2 o'clock out of Germany, 3 o'clock, 5 o'clock, and then 8 o'clock coming out of India. We have major news here then in the U.S. at 8:30. Tomorrow morning, personal income at 8:30. We got GDP out of Canada. Now remember, why do we watch the CAD news? The same reason why we watch the New Zealand dollar news, right? The Kiwi. Why do we watch the CAD? Because crude oil, natural resources. Okay? Canada, Russia, Australia, New Zealand, Brazil, the United States, Mexico. These are countries that have huge, huge industries based on natural resources, right? Crude oil, natural gas, mining, all that stuff that comes out of the ground. So we know tomorrow morning, keep your eyes on crude. 8:30 a.m. for CAD, and we got personal income and outlays. Move forward here, we got more from the CAD at 8:30. We got GDP, and then we roll down here. We hop, skip, and jump to 9:45, Chicago PMI, and consumer sentiment. Now, if you've been watching my newsletter for the past few months, what do I always say about Friday mornings? There's actually two important things you want to remember about Friday mornings. One, early in, early out. It's the exact opposite of a Monday. And two, that 10 o'clock-ish news is usually where we get the big move. We typically have some sort of consumer confidence or consumer sentiment number on Fridays, right? Tomorrow is no different. 9:55 a.m. That's your final move of the morning, most likely before we go into lunch. And you know me, I'm not a big fan of trading after lunchtime on Friday afternoons. So tomorrow morning, get in early and get out early. Make your money and wrap up the month. It's going to be a bunch of fireworks here tomorrow morning starting at 8 o'clock, 8:30, 9:45, and then 9:55. Now, Warren Buffett has always been famously quoted as saying, I love to play polo, but I will never play polo with anybody except who? A professional, right? If you're going to go out there and play tomorrow, be careful. After noon tomorrow, after 12 o'clock tomorrow, there will not be a single professional in the market. Why? Because it's the end of the month. And they're not doing anything to mess up their numbers that they're going to give their clients on Monday morning next week. So if you're a professional right now, you are not trading after noon on Friday, especially not tomorrow, end of the month Friday. So be careful, all right? When you got rookies and retail traders, the only people trading tomorrow afternoon, Friday afternoon, are going to be people who are ignorant to the situation. They're not going to understand what they're doing. And that's not who I want to be trading with. And the other person is somebody who has no choice, right? You know what I'm talking about. Boss man comes to your desk and says, hey, JJ, you better get yourself back to your number before you finish the month. So the only two people trading tomorrow afternoon are going to be rookies or people who have no choice. And either way, I don't want to be wrapped up with those rookies, all right? Either it's rookies or it's necessity. Either way, I don't want to be involved. So early in, early out tomorrow, look for the biggest fireworks between 8:30 and I'd say 10:30, 10:45, which is all we need to make our money. Now that you know what's in store for tomorrow, oh, and one more thing too. I won't see you guys on Friday. Sunday night, that's right, that's Chinese manufacturing, big deal, right? Big deal. I didn't take out the highlighter for nothing, right? I'm kidding with you here, right? But 9 p.m. Sunday night. So if any of you out there are like me, and after Sunday afternoon comes and goes, you're itching to get looking at some charts again, I do recommend you take some time on the weekends, spend some time with family and friends, remind yourself why you work so hard. But 9 p.m. on Sunday night, markets open up when? Markets open up at 6 p.m. Eastern time on Sunday evening. And then they start the week that week, right? So 6 p.m. markets open, be ready for some fireworks, 9 p.m. on Sunday evening. So we get an early morning tomorrow and then a kickstart to the week on Sunday evening with Chinese manufacturing. Let's keep going. Let's make sure we're ready for tomorrow now. Starting here with crude. I'm starting with my daily chart tonight on crude oil because that seems to be the big mover of the day today. You can see we've got ourselves stuck inside this middle of this range, you can see. I've got projections up to 106 right now. I want to show you this chart, though, because I want you to see where we have potential to go next. 106 is my projection for next time. We go to 109 and 110, and then I got some levels up top here at 113. We won't worry about those right now. But as you can see, though, this chart, again, this chart will be available to download for you tonight. So 106 is the next major resistance. And you can see here we are going to be dealing with this bit of a bullish triangle, right? Bullish flag, bullish pennant, whatever you want to call it right now. Next chart, though, is definitely going to be the most important chart here for that longer term projection. You can see now I've got support levels here below me. We just made new highs, right? We keep on kind of ticking back here. We keep kind of testing the water here, right? New high, pulling back. We got that pullback we were waiting for earlier this week, and now we're trying to make our move higher. 106.56 is our projected level overhead. You could also draw a simple trend line here, and that trend line also could be a target up top there as well. We'll lock that down for us. If we do happen to collapse, I've got 101.45 waiting for us here, right, as support. These are longer term projections. I just want you to see what we have in store for the future. How do we actually profit from this though? So now that we know we're going higher here, here's how we profit from it. Now, if you remember, we took a look at that VIP chart. And the VIP chart this evening showed us that we didn't quite get to that 104. Remember that? That was the high from yesterday. So disappointed that we didn't extend this move higher. The volume, if you remember, was right in the middle. So we were here earlier this week. Last night's newsletter, the last couple days, my exact words were, just you wait until we get back lower and then we're buying. And if you followed my advice, you made a killing here. It was today. It was basically all day today. So if you followed my advice, you knew exactly what you were waiting for. Yesterday's move was not a sell-off. Like I said last night, it was not a sell-off. And now we have this price wedge. Trend line overhead, trend line below. And, you know, if we would have closed higher today, I would have been a lot more bullish. I would have been a lot bullisher, if that's a word. I don't think that is, but maybe I should create one. Okay? So if it would have closed higher today, I would have been all over this for tomorrow. But the reality is, we couldn't even get to 104. You'll notice we backed off those highs. The volume was in the middle. So I'm expecting this. Now remember, I don't want to predict. I have to still come in tomorrow, find my levels, find my trend, find my personality. Then that tells me what to do tomorrow. And remember, come in and see me tomorrow in the trade room, and I'll tell you exactly what to do. Okay? But for right now, though, I'm going to be buying this 102.89, selling the 104.10. At least until something changes. This is my range. Now, you know what Mama says, right? You know what Mama says. Don't fiddle with the middle. Stay the heck away from this 103.50. 103.50 is exactly where the volume was today, wasn't it? Right? 103.45. That's where the most volume was today. So my plan here on crude, I am still bullish in the long term. We got summer driving season coming around the corner. We did actually hear some geopolitical news today. All right. Putin put his shirt back on, of course. That's always good to cool things off. Right. I was getting a little bit hot and bothered myself. Right. Wink, wink, nod, nod. But the real news was that the Russian military, what do they call it? Exercise. Yeah, right. Exercise. I like that. I like the way of putting that, Putin. The exercise now, they've taken off the border of Ukraine. So as of about an hour ago, we heard from the Pentagon that they had backed off the border of Ukraine. Not sure what that's going to mean for tomorrow. I don't really need to worry about it too much. But, hey, that may lead to prices kind of sitting here right now because the two big reasons we've been bullish are summer driving season, obviously the chart telling us to do so, but this whole issue, all the shenanigans coming out of Russia. So some of the geopolitical stuff's calming down right now. We'll see what happens tomorrow. Right now, though, as price goes lower, I'm buying. As price goes higher, I'm looking for selling. Now, I'm not going to just hit the sell button because if we blow right through it, I'll be right back to bullish. So if somebody said, Joe, you've got to pick what direction for tomorrow, I'm definitely picking the buy side. But I'm going to be watching for both buys and sells inside of this range. Stay the heck away from 103.50. I'm buying lows. I'm selling highs. Taking profit at the highs, taking profit at the lows until something changes. I hope I'm wrong because if we end up going above 104.28, I will get right back on that horse and I'll start buying again up to 105.41, 106.16. All right, guys? Don't force it tomorrow. Don't force it. I know we've been bullish all week. I was so amped up today in the trade room. We got that huge move at the end of the morning today. Awesome profit on crude. But we can't let one big winner get us off our game. We've got to follow the chart, follow the price, follow the personality. All right? That's my plan tomorrow for crude oil. Moving forward here, from an active market today to a kind of a yawner here today on gold. And you can see why. We're sitting right on top of support. So right now, here's my daily chart on gold, sitting right on top of key support here. And this key support at 56.5, zoom in on this for a second, and look what happened. That big wick right there, right? So what do we get? We got this candlestick here with this big old wick, right? It dipped its toe in the water below it, and then whoops-a-daisy, right back up above. We need to get a close below 56.5 if we're going to be back to being bearish again. And our next target down bottom is 1240.2. And, of course, 1227.3. All right? If we don't close below 56.5 tomorrow afternoon, the buyer is going to come in and grab this thing. All right? They will. They'll come in and grab this. Or whoever is short right now will cover their shorts, resulting in buying pressure. Okay? There's your gold. Moving forward here now. On the 89 anchor, you can see here another great example. We get the price wedge. There was a wedge right here, right? This is from last week. We dropped out of the wedge. We get a bear channel, as you can see here right now. And again, we're still stuck in the mud here at this, in this case, 52.7. What I would love to do is I would love to get short selling this 1283.4. That's what I'm really kind of hoping for right now, is we can get back up into this area. Now, you might think I'm crazy about this on gold, right? Why would you wait that long? Just as crazy as him on crude, right? I told you guys last week, wait for crude. And what happened? It came right into that sweet spot, and we bought it. We made a killing on it. I am crazy. Oh, yeah, you better believe it. I'm just crazy enough to sell this market on a retrace. I'm not going to sell it at a discount. I'm going to sell it at a premium. All right? I'm not that crazy yet. At least not yet. I'm just getting started in my career. So we know what the plan is on gold. I want to be a seller. I want to follow this trend, but I refuse to sell at the lows. I refuse to sell at a discount. I'm going to sell at a premium. I'm waiting on gold. Here are some other levels here on gold. If you're looking for selling opportunities right now on gold, this is my faster anchor chart. I got 47.5 for a short-term target down bottom. I got sell zones here at 59, 63. I've got resistance areas here at 68.4, 72, 77.5, and 92.7. So if you can't resist the temptation, if you can't sit here patiently and wait till next week for the big retracement, here are some selling opportunities for you going into tomorrow. Remember, though, we're not just hitting the sell button here. I'm going to wait for price to test the area. Once it starts to collapse, we know we got them, and then we're going in for the pattern to get short. These areas I'm marking up here are areas of resistance, not tradable, not trade areas, right? I'm not putting a limit order to sell short right here. All right, that's a little bit crazy. I'm going to wait for the turn, and once I see the turn, then I'm looking for the pattern. All right, and if you want, come in, join me tomorrow. In my trade room, I call the trades live. I give my traders exact entries, exact exits in real time. Heck, I even use limit orders so you can get in before me. It's amazing, guys, to be able to use this information from tonight, and together in real time, we're going to profit together tomorrow morning. That does it for gold. And then last but not least, the mighty mini Russell. I've been talking about this all week. We are in a very difficult spot here on the Russell. Now, it's almost like we had the majority of traders listening to me last night. Was everybody listening to me? Did everybody just not show up today? I was talking to traders in the pit this afternoon. They were complaining about low volume. And I said, well, I know exactly why we have low volume. I told everybody on my newsletter there was going to be a difficult time on the Russell this week. So clearly they must have all listened to me. Maybe not. Maybe not. I don't think they all listen to me. But as you can tell, though, nothing's changed between yesterday and today. We still have this very, very difficult environment, because what you see right here is we have all the key moving averages acting as support, and we have a sell zone. So we're stuck right here, right? We're back and forth, right? We're stuck right here in neutral. We need some more buyers to come in and push this thing higher. And like I said earlier, it just feels like there's no sellers. It's not so much there aren't any buyers, but it feels like the reason why we're keeping propped up right now, because remember, these prices do not operate in a vacuum. If we don't have a buyer for every seller, prices will move outside of this range. So we are trading, buying and selling here. It's like a ping pong match, right? Or a tennis match. Okay, so back and forth here. This chart really illustrates why we're so concerned about, well, I wouldn't say concerned. Concerned isn't a very good way to describe it. Again, I can't change the game. Understand there's a range right here, right? Support below you, resistance above you. Buy the lows, sell the highs. Buy the lows, sell the highs. Buy the lows, sell the highs. That's all we've been doing this week on the Russell. And we made some great profit because of it. Moving forward here now, you can see again, here's another one of our anchor charts. This time it's a JJ bar, right? Not a daily chart. But on this anchor now, you can see same thing. Now, under normal conditions, we would have collapsed by now, right? Hitting their head against that 43.6, we would already be back to that 12. So clearly these bulls are here. And we talked about why. It's the only game in town. Gold's going lower. People are taking their money out of the safe haven, the shelter market of gold. All right, bond yields are very, very low right now. So clearly you've got a lot of, kind of feel good, warm, fuzzy feeling out there in the economy right now. The geopolitical stuff's calmed down, at least for now. Don't you worry, though. The news media will be fear-mongering again next week. I'm sure they'll figure something out to make us scared about something. So we know we've got that resistance overhead. We're kind of sitting on this trend line. If you're a member of mine, you know how important these reversal lines are. So you can see we haven't snuck below those reversal lines yet. So we've got this range we're dealing with right now. And now that you see the big picture, now how do we trade it? Well, now we look at our faster anchor chart. And here's how we trade it. This is exactly what I said last night. In fact, really nothing's changed. I mean, I could have given the same chart from last night, same stuff. Except this time around, I've added on some extra artwork for you. Ooh, see? Yeah, that's right. Investing in our presentation. All right, sideways range here, 1145.2 at the high, 1130 at the low. My exact words last night are the same thing I'm going to say tonight. Sideways range, buy lows, sell highs, buy lows, sell highs, buy lows, sell highs. If we go below, if we can get below this 1130, I'm gunning for that 1116, 1115. All right, this should be where we go pretty darn quickly. The only thing I see here for support below me right now, I see 4 key support levels. Are you ready? 4 key support levels. Number 1, 1130.2. Number 2, this trend line right there. Okay, that's an old trend line that was broken. What was resistance becomes support. Right? We learned that in Day Trading 101. So as we go lower, 1130.2, the trend line, the 16.9, the 15.3, and the 1110. 1, 2, 3, 4, 5. I lied. That was 5 support levels. All right? So 5 support levels below. When we get below the 1130, I'm always going to tell you this. When you have a range-bound market, you've got to be suspicious for the, see daisy, right, the fake-out breakout. You've always got to be aware of that. That's a reality. That's a threat. So I'm usually the person who doesn't get into the first move lower. I usually don't try to force it, right? I always say there's no prize for first place. Nobody cares. There's no medal. I don't get to go get a star, right, or a certificate saying I was the first one to get short below 1130.2. I think it was Paul Tudor Jones who said in a book I read a long time ago. He made it was such a wise comment, and he said, you know what? At the end of the day, when you make your money, nobody cares how you got there. Nobody cares if it took you a year to figure it out or a decade to figure it out. Nobody cares if you make your money and you were the second person in or you're the first person in. Nobody cares. The only person that needs to care is you. Don't try to be a hero. Don't try to be the first person in on this short, right? Because it might be a fake out breakout. So what I like to do is I like to wait for that breakout, see where it goes, and then react from there. Yeah, I do. I miss some trades sometimes. But just like a surfer, you're not going to get every wave. And if you do get every wave, you're going to end up being broken on the beach, right? Your board will be snapped in half. So remember, keep it simple tomorrow. Buy those lows, sell those highs. If we get it below the 1130, then I'm looking for selling opportunities down to the trend lines below. If we do make it above 45.2, though, this is going to be a big deal. If we do get above 45.2, the next leg up is 58.9. That's a pretty big jump, right? 130 ticks. Right now, the good old Rusty is trading about 160 ticks on average. So if we can get a bullish opening bell analysis tomorrow morning, get above, yeah, that will be right within our striking distance for the average daily range right now in the Russell. So get me above the high at 45.2, I'm bullish. Below the low, 1130.2, I'm bearish. Anything inside of it, stay away from the middle, buy the lows, and sell the highs. Don't force it tomorrow, guys. Do not force it. Tomorrow is the last day of the month. It's been, I don't want to say a weird week, but it's been a different type of personality week. It definitely feels like traders have reasons to be distracted right now, right? Maybe it was a sunburn they got on last Memorial Day weekend. Who knows? All right. Bottom line is, though, we've had a very, very profitable week. Let's bank those profits. Let's wrap the month of May, and let's kick the tail out of the month of June. Are you with me? I know you are. Guys and gals, I want to thank you so much for being a part of this newsletter this evening. We do these newsletters Monday through Thursday, and please share this with a friend. Don't forget to share this with a friend. Now, my wife Megan and I, we created SchoolOfTrade.com over 10 years ago to be a safe and effective and maybe a little bit of fun environment to learn and earn together. I want to welcome you into our community of traders. We are the longest running educational website on the web. Go check it out for yourself. We've been doing this for over 10 years now, and there's a reason why we are still around. We have 3 levels of membership: beginner, intermediate, and advanced, and we have a free trial that most people would charge for. Check out the free trial. Give me a call here in the office. I would love to talk more about what you're trading, how you've been doing, what's been keeping you from reaching your full potential. And don't forget, guys, I'll be back on Monday for my next newsletter, Monday evening. Have a great weekend. Be safe out there. And don't forget, as we go into the weekend, the most valuable commodity we have is time. Make sure you spend some time this weekend resting up and with the people that you love the most, because our time is limited on this planet of ours. All right? I'll do that too. You do the same, and we'll see you tomorrow morning at 8 a.m. in our live trade room. You guys have a great evening. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.